artificial intelligence. I mean, it feels like you can't go 5 minutes without hearing about it, right? And it is absolutely setting the stock market on fire. We're all seeing these headlines about people making fortunes overnight, and that creates this huge nagging question for every single investor. Are we looking at a once-in-a-generation opportunity, or is this all just one massive bubble? Well, that's exactly what we're going to break down right now.
And this right here, this question, is at the heart of what so many of us are feeling. You know, every news story, every conversation, it pulls you in two completely different directions. On one hand, you've got that serious FOMO, the fear of missing out on what could be the next internet, the next huge thing. But on the other hand, there's this gnawing fear that it's all just hype, a giant bubble that's about to burst and take a lot of people's money with it.
So, when things get this crazy, this hyped up, it's usually a good idea to listen to a voice of reason. And honestly, there are a few voices out there more seasoned than Warren Buffett, the Oracle of Omaha. This is a guy who's built an absolute legendary career, not by chasing the latest fad, but by sticking to timeless, solid principles. And this quote, it just perfectly captures his whole philosophy, and it's going to be our guide for this entire discussion.
Okay, so to really get where Buffett is coming from, we have to first appreciate the sheer scale of what's happening right now. We are living through what you can only describe as a modern-day gold rush. And this time, the gold is artificial intelligence.
And let's be honest, the social pressure is immense. Your friends, your colleagues, every expert on TV, everyone is buzzing about AI. You see these stories of incredible, mind-blowing gains, and that little question starts to creep into the back of your head. Wait, am I going to be left behind on this? It's a really powerful and, frankly, a pretty stressful feeling.
And this hype machine, man, it is being fueled from all sides. I mean, the technology itself, undeniably revolutionary. That, in turn, is leading to some truly massive stock gains, which, of course, gets Wall Street incredibly excited. And then the media just jumps all over it, covering every single twist and turn, which creates this feedback loop of nonstop saturation. It is an absolutely intoxicating mix.
So how in the world do you cut through all that noise? How do you navigate this gold rush without getting swept away? Well, we can turn to the quiet, steady wisdom of Warren Buffett. Now, his approach isn't anti-technology at all, it's pro-discipline. And that offers a really powerful antidote to all the hype.
This right here, this contrast perfectly frames the two different mindsets. The hype is all about trying to predict the future of technology, which is an incredibly difficult, if not impossible, game to play. But Buffett? He plays a completely different game. He's not trying to be a futurist, he's a business analyst. His one and only goal is to find companies that are going to be profitable for a very, very long time.
And that leads us to one of his core ideas, the circle of competence. It sounds so simple, but it's incredibly powerful. Just invest in what you truly understand. So you got to ask yourself honestly about that hot AI stock everyone's talking about. Can you actually explain its business model? Not just that it uses AI, but how it uses AI to make actual money. Do they sell subscriptions? Is it advertising? Enterprise contracts? If that answer is even a little bit fuzzy, you might be stepping outside your circle.
And this brings us to the absolute heart of the matter. We have this tendency to assume that if a technology is going to change the world, well, it must be a great investment. But you know what? History tells a very, very different story.
You know, history gives us a perfect and powerful case study for this. To really understand the risks in AI today, we can just look back to the late 1990s and the dot-com bubble. And let me tell you, the parallels are both fascinating and, yeah, a little bit frightening. Just look at this roller coaster ride. The hype around this new economy started building up around 97. By 1999, it was a full-blown mania. Everyone was a day trader. Then, in 2000, reality came crashing down. The bubble burst, and by 2002, the Nasdaq had lost nearly 80% of its value. We're talking trillions of dollars of investor wealth, just gone.
And the lessons from that time are so stark. The internet was revolutionary, no doubt about it, but most of those dot-com companies went completely bankrupt. Trying to pick the long-term winners back then, like Amazon or Google, was like trying to find a needle in a massive haystack. You know who often made the most durable investments? The shovel sellers, the ones providing the essential tools for the gold rush. For AI today, think about the companies making the super powerful chips or building the giant data centers. They profit from the AI boom itself, no matter which individual app or company ends up winning.
All right, so we've seen the hype, we've looked at the historical warnings. Now, this isn't about being pessimistic or scared, it's about being smart and building a better strategy. So that brings us to the solution. Buffett's practical, timeless playbook for any investor.
And let's be absolutely crystal clear on this point. The message from Buffett isn't run away from technology. Not at all. It's run towards solid business fundamentals. The exact same principles that you would apply to a railroad company or a soda company, they also apply to an AI company.
And here it is, that timeless framework. It's a simple 3-step sanity check. First, can I actually understand this business? Next, does it have a durable competitive advantage, what Buffett calls a moat, to protect it? You know, for an AI company, that moat probably isn't a single algorithm that can be copied. It might be a massive, one-of-a-kind dataset that nobody else has. And finally, is the price I'm paying for this stock sensible? Or is it priced for absolute perfection with no room for error?
So, let's circle all the way back to our original question. We've seen the mania, we've heard the caution, we've reviewed the playbook. What's the final verdict here? Should you be panicking?
And the answer, maybe not so surprisingly, is no. The solution here isn't some frantic action. It's not about blindly buying into the hype, and it's not about panic selling everything you own. The real answer is a mindset shift. It's about moving away from being reactive and towards being prudent and disciplined.
So here's what you can actually take away and apply, starting today. Focus on the real underlying value of a business, not the speculative vapor of a story stock. Put your own understanding first before you follow the crowd. And maybe most importantly, remember that in a world that is completely obsessed with speed, choosing to be patient is one of the most powerful strategies you can possibly have.
And we'll just leave you with this final thought to chew on. As all these machines get faster and smarter and the markets move in the blink of an eye, maybe, just maybe, the most valuable asset we have as investors isn't a better algorithm, but something much simpler: human patience.